Hello. All right. So we're going to look at the probability of a correction, right? I don't know if it'll be 10%, 3%, 5%, not sure, but definitely the probability is rising. We're going to go over those elements of that. Let me get the Instagram going, get live on there. There we go. So probability of a correction is rising. We're going to go over that. And also, I mean, I still think we're in a bull market. We're still going to move higher year end. We're still, there's a lot of growth drivers underneath the hood, but we might be seeing another maybe 3 to 5% correction. I don't know about 10. 10 would be a little wild, but let's dive into it. All right, so let's first it's been a while. It's been a while, but we're gonna go into this. So I want to take a look first at our RSI here, S&P 500. We're gonna look at the broad market. We're gonna go into the business cycle dynamics, tax cuts, possible oil shock, participation sucks. Right, you got all the elements here on YouTube on the bottom if you want to see, the combination. I think for a correction, does it come? I don't know. I think the probability somewhere around 30%. 30% probability, but that probability of a correction is rising. All right, that probability is rising. First off, today we have a pretty sharp rally, but this is the lowest volume of the entire year. If anybody's noticed, today's rally is the lowest volume. Okay, it's pretty sharp rally. We're pretty much breaking through a lot of resistance here on the S&P. We had this resistance broken through. Now we're trying to retest this high. This was the PCE high. So taking a step back, PCE was a great inflation read. This was the best PCE, personal consumption reading that we've had all year, right? That was the best reading we've had all year. And I was expecting the market to launch to all-time highs right after that PCE report. So first off, very low volume here. We're getting very low volume on this rally. So the sellers are waiting, right? The market makers are not fighting anything. They're waiting. And I think we have a lot of resistance up here. So this was our PCE. Basically, our PCE was the top of this wick, the previous PCE. And this was like I said, this is the best PCE that we've had for a while. Now, the reason I say this, and I don't think we're having a 10% correction tomorrow. Nobody's saying that, but it's coming. It's coming. Pretty wide, pretty big correction coming. This was our last PCE report. Okay. The last time the Fed saw that there was a lot of progress on inflation, and we came out of the correction pretty strong, drove us to a new all-time high rally. Now we're starting to wedge. We're starting to wedge, very powerful pattern, but we have some headwinds. We got some headwinds in front of us, and that's what we're going to go over first. Right now, first big headwind at the bottom, you can see there. If you're on YouTube, jump over there. You'll be able to see the charts a lot clearer. If you are on YouTube, you hope we get a small correction. Yeah, we will. We'll probably get a correction here for sure. So the biggest, one of the biggest things right now is that the Fed is slamming the deficit. Okay, so keep in mind here, Trump and Biden are both going to keep spending. We've talked about this all year. They will keep spending. They will keep stimulating to get votes. Do you think they really care about the yields? Do you think they really understand that bond yields in the bond market? Here's the bond market collapsing at the moment. This is what I'm worried about. Let's take that. Let's go ahead and take the volume off. Don't really care about that. But the bond yields, the bond market collapsed over the past couple of days. What is this about? Now, the reason this is important because it drives yields higher. It drives interest rates, long-term interest rates into the market higher, right? The 10-year yield is the benchmark rate. Okay, now after the PCE, I was expecting a breakdown for us to come much lower here, all-time highs. Market breaks out, did not happen. As a matter of fact, we had the debates, and regardless of the debate, once the market expects Trump to win, based off the debate, the market is expecting a Trump victory. Yields started to climb. And I said, wow, okay, that's not good. We don't want to see yields climb because it increases the probability of recession. It increases the probability of something breaking in the banks, in the real estate market, whatever it is. Now, the last time, let's go back to the S&P, the last time that Trump, this is all coming from deficit spending, right? And the Fed today, along with Christine Lagarde and the ECB, the Jerome Powell and the ECB, basically said, look, the deficit is way too high. The government keeps spending. They might not cut rates until we need rate cuts. The housing market needs rate cuts. And they're saying we might not cut rates because they keep spending, right? They keep spending. They are separate entities and they keep on spending. And let's go back to 2017. Look what happened last time. Okay, let's take a look back, and we're going to go back in history. We always do. The last time that Trump went to go, was spending money like crazy, he did the tax cuts, right? Last time we got tax cuts was 2017. I'm going to turn on, we're going to put bond yields on here, 10-year bonds. Okay. 2017, where are we at? Here we are, 2017. And we did have a nice stock market rally in 2017. We had a pretty nice rally. But here's what we saw first in the, the orange line. It should be the orange line. I like to turn this white. Go ahead and turn that white. These are 10-year rates. And June 16th, as soon as we got to about November 16th, somewhere around here, we saw, let me put this on the daily chart. It'll be easier to see. There we go. Here we go. Here it is right here. These are bond yields. These are interest rates, right? The cost of money, the cost of borrowing, which impacts all the businesses. It impacts corporations. It impacts, the economy in general. Not the Fed funds rate exactly, but the bond rates, the long-term bond rates. They soared when they knew that Trump was going to win. This is November 2016. Trump won. Okay, he pretty much locked it in, and bond yields soared. The rate of interest soared immediately to price in what? To price in tax cuts. Because tax cuts mean more spending, more inflation, right? Not crazy inflation, but more spending and the threat of inflation or the risk of inflation moving higher. Did it fuel companies? Yeah, Amazon went ballistic. That's when we saw Amazon rise tremendously. But in this scenario we're in now, we have very sticky inflation. So if we get bond yields starting to rise, that's going to hurt stock valuations. That's going to take earnings down for stocks because now they have to pay a lot higher interest. Okay. Now, I don't know if bond yields continue to go higher. We just can't tell, but they are rising. They shouldn't have done this, especially after a disinflationary report. We should have seen bond yields go lower. So now the number one variable, okay, is the rate of interest. If the rate of interest continues to stay higher, that's not going to be favorable for the stock market. Crypto doesn't care as much. Crypto wants liquidity. Crypto wants cuts of shore, but crypto wants more stimulus. It does not care about rate cuts as much as the stock market does, right? Number two risk here. It's rolling on the bottom there on YouTube. So we got the Fed slamming the deficit. And I think what they're communicating is, look, if you guys continue to spend, then we're not going to cut rates. That's going to hurt housing. That's going to put us faster into recession. Okay. So the yields and the tax cuts, right? The expectation of tax cuts or Joe Biden spending on more stuff is going to drive yields higher. If that drives yields higher and we see the bond market fall off, then that's going to keep things tight. That means the Mag 7 continues to go higher. Small caps struggle, right? Anything interest rate sensitive, the housing market, they're going to struggle. And we should just see Apple, Amazon, Google, Facebook, Nvidia, Tesla, if they get it together, continue to go higher and create a more condensed market, create a less broadening market, less participation, and more concentration. Hey, if you're in the Mag 7 or if you're in the big stocks, you're good. But if you're not, you're going to have to wait a little longer if this continues because the market cannot do well. We want bonds higher. We want bonds to go up a little bit, and that's not the case right now, right? Next biggest threat here is an oil shock. That will take us into recession quickly. An oil shock will take us into recession immediately. Why? Because if the gasoline prices go any higher, with the consumer already falling, with GDP coming down, GDP is already falling. GDP is already weakening. It's not negative. We're not in recession, but GDP is very slow. We got that final number in the first half of the year. We finished and GDP was at 1.3%. Not well below trend, but is basically at trend. It's not higher than the debt. We're printing more debt. We're creating debt much faster than GDP. Not good. That removes liquidity from the market. So if oil does break out, and we did talk about this, and oil breakout is the one thing we don't want to see because it means energy is higher. It means consumer gasoline is higher. It means what? It means inflation stays a little stickier, and it means yields bond yields, rates continue higher. And if rates go higher, that's going to keep the market down. So we definitely don't want to do that. The good part, the time period we're in now, we're at peak demand for oil, though. We are at peak demand. So this might be the end of the move. If we look at the RSI, we're almost overbought on the oil. Oil prices are almost overbought. We don't know. Either way, we do not want to see oil break out. I'm not sure if it breaks out or not, but this is not the pressure you want to see, because it also drives interest rates. Okay, 10-year yields, 2-year yields, it drives them higher. That's why we're seeing this rate. We're seeing interest rates rise short term, right? Now, long term, I think they're lower, but definitely they're rising right now. And this also keeps the Fed expectations from cuts, that pushes cuts out further. The market does not want to see cuts out further. I don't think the market is going to continue moving higher all year if it doesn't believe the Fed at least does 1 or 2 cuts. I think we need at least 1 or 2 cuts to relieve some of that rate pressure against the economy and against a lot of these corporations who are borrowing money, right? So definitely oil prices, you don't want to see that. And then we have the dollar. Okay, the dollar is a big macro force. We don't want the dollar breaking out. And here's the problem with the dollar: if interest rates go higher, that makes the dollar more valuable. Okay, for crypto, this is a big deal for crypto. If you are a crypto investor, dollar is probably the best asset versus crypto that you want to see move in the opposite direction. Crypto has its biggest bull runs, its strongest rallies when the dollar is falling, right? So the dollar has been rising in the short term, and if it does break out, because we have interest rates rise, if interest rates rise in the US, what does that mean? That means the cost of investing your dollars or just holding dollars is higher. It attracts investors towards the dollar, so the dollar goes up. And guess what? They don't want to risk recession. If recession comes, people buy more dollars. Why? Because everything else is falling. Earnings, revenues, everything else falls while the dollar gains value. That's not good for crypto, and that's not good for stocks. I'm not saying it will happen. I'm still bullish, but the risks are rising, right? The risks are rising for that. And we're going to go over the business cycle also. But so far, let me see where we at. Correction. Yeah, so we don't want to see the dollar rise. We can see it stick up here, but we don't want to see it rise. Here's another thing driving the dollar higher. I just want you to keep track of this. We also have the ECB cutting rates. They're going to continue cut rates. If the dollar, if the Fed controls the dollar pretty much, if the dollar doesn't receive rate cuts, meaning the dollar's earned interest is higher and more valuable, the dollar is going to continue higher while they cut rates, because their currency weakens. If they cut interest rates, they debase their currency. Their currency falls in value while the dollar gains value. So that's also a negative towards the crypto and the stock market. It's not a big tailwind, more so for crypto, but we have all these variables stacking up, right? Higher oil prices, maybe oil shock, maybe rates go higher because of deficit spending, maybe the dollar goes higher also. If all these things hit at the same time, it's not going to be good. We're going to get a correction of at least 3%, maybe 5%. We'll get a correction for sure. And I'm not sure when it comes. It may come during earnings season, right? Now, stock participation, right? Let's go over stock participation. We're not getting a whole lot of participation. We know right now volume is very low. And if we go to the internals and we look at how many stocks are moving above their 50-day moving average, that is decreasing, right? That is decreasing. Less market breadth, less participation in the market at the moment. We're at 39%. Going in after a great PCE report, after a very good macro data point, stocks are still rolling over. And that makes you question, well, why aren't they growing? Maybe because the growth scare is now on the table. Maybe inflation is not the risk anymore. I don't think it is. I think it's a growth scare. And the real fear is the Fed does not cut in time. The Fed does not cut rates in time because now they're getting hawkish because of Trump stimulus, tax cuts, right? They're getting more hawkish there. Then you get oil. If oil breaks out, that's also going to keep the rates higher. So this is not good for stocks. I know you have a lot of comments there. Let me hit some of these comments really quick. Let me scroll up and then I'll hit some of these comments. Yeah, I bet no cut. I think we need 1 or 2 cuts. We need 1 or 2 cuts. It's all rigged. The government creates bonds and then they get to control the interest. No, they don't. The government does not control the interest on the bonds. The bond market does, not the government. Bond rates are controlled. by the market, whoever buys them, right? If bonds go up, interest rates come down. If bonds go down, interest rates go up. The government does not control interest rates, or else they would make their interest rate zero. They want to keep spending. The government does not help the health when when the economy is overheating. The government does not care. They want to overheat the economy, and the Fed comes in. They have to tighten rates for they have to increase rates, not necessarily the government. The government just wants to keep spending. Eliminate middle class corporate. Okay, well, we're not talking about the thesis of everything collapses, just more so we might get a correction. Stocks and crypto will still be higher. This is a very strong cycle, but in the medium term, I think heading into earnings, we're going to get a correction here. Don't listen, guys. Market will just go higher. People always yapping about the same thing. I agree. Whoever said that, I agree. Most people are just yapping. I'm not a fear. Listen, I'm pretty bullish. I am bullish. I think Bitcoin goes to 100, 150K. Okay, I'm pretty bullish here. Also on stocks. Usually my content is pretty bullish. It's not bearish at all. What stock is this? We're talking about S&P 500. Hopefully it hits 87. No interest rate hikes will cut this year. So what's the predictions with volume low holiday? Low, yeah, it's a low volume season for sure, but we're getting a big move. And right after PCE. So if we add the variables, PCE was very good. We got the best inflation report that we've had all year, and the market could not make new highs. And look at now we're getting participation actually fall apart a little bit, right? Yeah, Tesla's breaking out, but participation is pretty crappy at the moment, right? Year end, I'm still higher. I think the S&P goes to 560. I think we are looking at 560, and but our last PCE report that was pretty good. The market ripped. Okay, we had this good PCE report, and we didn't rip. We actually came lower, and now we're bidding up on very low volume. Right now, oil is pressing a level. Look at the last time oil got this high, and the oil is important. It is an inflation expectation gauge when it comes to the economy. Last time oil was at these levels was the April correction. I'm not saying it was all oil. There's other factors for sure, but we all know the market's a little, overbought in some areas. I still think it's constructive, but it's a little overbought in some areas. And when oil, oh, you guys can't see it on TikTok. Whenever oil gets this high, it threatens an oil shock, and this threatens the economy, and that means the Fed is going to have to make a decision. Are they going to cut rates, or if there's an oil shock, or are they going to hold where they are? I'm not sure. We'll see where that goes. And the real question is, where are we with the economy? Are we actually looking at recession? I haven't believed, I don't believe we're going into recession. I don't think we're going to see it, but the market will correct ahead of the recession just to make sure. The market will correct before that even happens. All right. So what else we got? So Fed slams deficit. The Fed may hold rates higher because of deficit spending and Trump's promises. Tax cuts are going to drive yields higher. Okay, keep that in mind. They will. If we get an oil shock, we're going to decelerate. We'll probably hit a recession. Participation sucks, and the earnings recession. We start earnings next week, and I'm not sure what's going to happen in earnings. Let's take a look at Nvidia. The real question here is Nvidia is the biggest stock in the market now, pretty much, right? Microsoft, Apple, they're all kind of up there, but Nvidia cannot. It's going to be tough for Nvidia to really beat here. Okay, so the overall market is getting less sensitive to good inflation reports. This is why I'm a little concerned that we get a sideways consolidation or a correction, because the market is not responding to a positive inflation report the way it was. And now you need Nvidia to crush earnings again for what, a fourth time in a row. They don't need to meet expectations. They need to crush expectations again. And that will not continue. Momentum comes down at some point. If we look at the RSI, Nvidia is starting to roll over. Now, yeah, we have Microsoft still bidding higher. We got Apple still going higher, but Nvidia is going to bring down the semiconductor, the chip sector, and the chip sector is usually weak from now till October. So that might be some sideways action. And yeah, there's always a bull market somewhere. I mean, Tesla's looking good. Tesla's energy storage business might be something that investors look into because of all the data center demand. There's an extreme data center demand, and Tesla's energy business is growing the fastest. Now we broke out. Okay. We broke out of that reverse head and shoulders for Tesla, exploded. We'll probably consolidate up here a little bit, and we'll see where it goes from there. But Tesla's exploding. Automotives is coming together. All the negative narrative is kind of disappearing, and Tesla's looking pretty good. But before we go on to the charts, Amazing move by Tesla. Elon tweeted today. Okay, let's see what we got. Elon tweeted it basically something along the lines of, once we get FSD perfected, everyone who's shorting Tesla will include Bill Gates will get. Yes, that is true. Tesla is the largest shorted stock in the market by market cap. So when it does rip, and it is ripping, but this is a baby rip. When it rips, I mean, it's going to rip to close to all-time highs. It'll get to 300. Okay, it'll get to 300. It's going to rip. Right now, I got it at the golden pocket, so we might consolidate here. Who knows? And I think when we get that overextension, we're going to like 400. We're going to 3 to 400 if we continue, if we get that narrative of energy storage. Because remember, right now, electricity power is in high demand. Okay, if oil prices are so high, then the demand for energy needs to come from somewhere. So it's going to come from, better battery technology. Tesla has very good battery technology. Their mega packs are really good. And not only that, but the demand for energy is going higher because all the hyperscalers are spending on energy consumption, right? Amazon, Apple, Google, Facebook, they're all spending on these data centers. They need more electricity. And there's a stock, there's a stock you can look at. Where's it at? It's in my watch list. There's a stock you can look at that is pure utilities. Okay, no, that's not it. CEG, Constellation Energy. It is consolidating. It looks pretty good. I'm keeping my eye on it, pulling back into previous all-time highs. Okay. So this has been the most bullish utilities company, and utilities basically provide energy demand for the production of AI. Okay, that's all this is, the production of AI. Constellation Brands. It's not my favorite stock, but something to look at if you're a trader. I'd sell puts on it. I'm looking at to sell puts. I'm waiting for this RSI to get oversold. It is in a bull trend, so I want to see a strong pullback into a bull trend. I like Constellation Brands. Okay, I like Tesla, still breaking out. I like AMD. I know it looks a little shaky, but I still like AMD. Okay, still like AMD, still in a bull trend. I like it better than the other semiconductors, and I think it looks pretty good. All right. Business cycle. So where are we at in the business cycle? So what we're really concerned with, would you say Powell had a speech today? ECB Cherry was really dovish on this. Yeah, we're getting disinflation. We are definitely looking at disinflation, and prices are decelerating. Right? Let's see if we can pull up some inflation here, because I know a lot of people. Let's just kill the inflation narrative. We're not looking at the inflation threat. Inflation is not the threat. Okay, inflation is not the threat here. All right, I'm going to throw on business cycle stuff so we can see. I think the next thing we have is where are we looking at the business cycle. TikTok, if you want, you can jump over to the YouTube channel, link in the description if you want to see this, or I'll pull it up, but it's kind of hard to do both at the same time. All right. So we're in a paused business cycle. Why is that important? Because the business cycle is the earning cycle. It is not the prices of stocks, it's the earning cycle. The business cycle picks up, you're getting more production, more GDP, more earnings. Okay. But if the business cycle is paused, then earnings are not going to be that great. They're not going to be tremendous. And if earnings are not tremendous going into Q3, right? We're really looking at Q2, I'm sorry. If earnings are not that great, because look at GDP, okay? Let's put this all together. All right, TikTok, we're not going to look at charts. We're going to look at the business cycle. We're going to do some learning here. All right, so let's first go to GDP. Just know this, that stock earnings, not all of them, but in aggregate, earnings are a function of GDP, okay? Earnings are a function of GDP. Let's enlarge this. So if you see earnings have been decelerating lately, boom. Okay, there we go. We can see it a lot better. So GDP has been decelerating. This is basically Q1, I believe, Q1 GDP. All right, we're about to get Q2 GDP. It's not looking that great. Okay, it's not looking that great, Q2, because the consumer is slowing down. Why? Interest rates are high. Credit cards, right? People spent a lot in Q4, and we have a lot of commercial real estate issues. Employment is coming down, right? Unemployment rates going up. So GDP is coming down. Therefore, stock earnings, not all of them, right? Maybe Apple, Amazon, they all do great, but a lot of these earnings are not going to come in tremendous. I don't think it's, we're going into a bear market. No, we're talking 3% correction. We're not talking 10% bear market. Don't believe that trash. This is a bull market. All I'm pointing out is the probability of a correction is picking up. Okay, that's it. So GDP is coming down. All right. That means earnings, and GDP is backwards looking. So earnings are always going to look at guidance. but still it does tell us that, hey, things are starting to slow. So if we look at what were we going to look at first? I think we were going to look at, should we look at employment? Oh no, we were going to look at prices. Yeah, inflation. I wanted to prove to you that the inflation narrative is not the issue. Okay, it's not inflation anymore. It is not inflation. It's not inflation. Let's enlarge this so we can see it. All right, so here we got CPI. We're going to take off, let's keep on core here. Core CPI is what the Fed is looking at. You tell me that is inflationary. No, it is not. That's disinflation. I don't know who you're listening to. If you believe inflation is still going higher, okay? Yes, inflation is up 20% from the COVID, from the pandemic, right? That's the cumulative effect of inflation. It always goes up. But the year over year for the stock market, stocks are not the economy. Stocks are looking at forward, and the year on year momentum of inflation is coming down. This is disinflation. This is core. So we're not talking about energy. We're not talking about food, right? We're talking about stuff like services. That's all coming down, right? Core is coming down. And if we add in energy, my bad, if we add energy in there, well, it's pretty much coming down too. Let's do CPI. Okay, we'll do this one. I mean, that's sticky. Okay. If you add in energy, yes, inflation's a little stickier. It's a little stickier, right? And I don't even think stocks really care that inflation is really sticky. I really don't think they care. All right. And when I say stocks, I'm speaking of the best stocks, not some freaking company that's unprofitable. They're going to struggle, but the best stocks, they have pricing power, right? In the market in general, we're not talking about individuals yet. That's a whole nother ball game. That's a whole nother stream on individual stocks. By that correction, I agree with you. Not my real name. I agree. By the correction, we'll see SPY grinding due to tech AI bringing us higher. Yeah, the AI narrative is barely getting started. It might be a little overdone in some stocks, but AI is barely getting started. Rates will be lower in the future, but in the short term, in the short term, just be aware of the correction. And I think that's where your opportunity is at. Also, Atlanta Fed GDP came down. So they track GDP on a weekly basis. And that shows us that, that's also GDP is lower. So we're going to have a little bit of a growth scare. That's what I'm saying. It's looking like we're going to have a growth scare. I don't think it's going to be crazy, but a small growth scare. Now, if we can also look at ISM prices. Okay, ISM prices. This is a forward-looking inflation. These are supply chain prices for the supply chain. Okay, and they're starting to ease back down. Let me enlarge it. That looks so silly. Starting to come back down. And yes, they've been rising, but that shows you manufacturing is strengthening, but the prices are coming down, right? The cost of business is not inflating. Inflation is not the fear here. It is not inflation. It is sticky is there, but it's not inflation. How about rents? How about rents? Because housing is an issue. They're all falling. They're all falling. They're all falling. Housing, inflation, not prices. Okay. Inflation. The rate at which prices increase is falling, right? It's disinflating. Therefore, the market, not the economy, the market likes this. The market wants to see this. This is not the threat. The threat is that this disinflates so quickly that there's some defaults. We might get defaults, right? What else we got here? Let's take a look at year over year prices, consumption. Yeah. Well, anyways, PCE is what the Fed is looking at, and it's coming down. This is disinflationary. That's not the issue. The issue is growth actually coming off. All right. So let's go back to growth. What about our growth indicators here? Let's go to the industry. Manufacturing. This is forward-looking stuff here. Forward-looking stuff. I see you, Veronica and Max P. I'm gonna hit you on right now. Who makes the price of the bonds? Nobody. That's not a person who makes bond prices. It's the market. Like stock prices, nobody sets stock prices, right? Nobody sets bond market prices. The stock market prices is due to when a lot of people have the same belief and they take action that moves the price. Market makers. There's not a person or a committee who decides stock market prices. It is a market. So supply and demand, right? Take the course. Course is almost done. That's what I've been working on. Supply and demand. If there's more supply than there is demand, prices go down. If there's more demand than there are supply, prices go up. There's all kinds of ways to look at it. But either way, if something is scarce, it goes higher. If it's in demand, right? There has to be desire for it. So bond market's the same as the stock market. The only difference is the bond market also determines interest rates. They're claiming the battery charges in 5 minutes. I love CEG. Okay, cool. 196 is my entry. Sun Power, please. I'm sorry, I'm not looking at stocks right now. Maybe afterwards. I'm not looking at individual stocks at the moment. Sun Power, not sure. What's the name? 20% back to all-time highs. We're doing some. Okay, what website is this? This is macro micro. It's called macro micro. Okay, we're looking at the business cycle. All right, Max P, seasonality strong till mid-July. Look, I still think we rally into the end of July. I am not saying that we're bearish in the market. I'm not bearish. I'm very bullish end of the year for a lot of reasons, mainly because inflation is coming down, disinflation is happening, the Fed's going to cut rates, liquidity is going to pick up. But meanwhile, there is corrections. Meanwhile, you are going to see a pullback at some point. S&P cycles show a larger pullback mid-September. The bear market killer, usually what we do is if we look historically, we usually get a correction in like September, October. And that's the low. That's typically the low, September, October. Does it happen this year? Nobody knows. But if we go with the statistics, that's what we're looking for. So I think July is going to be a peak. I think Bitcoin rips in July. Now it looks like a little later July, but I think Bitcoin and crypto is going to start ripping. If not, it's going to rip at some point. S&P cycle show larger pullback. Yep, exactly. Biggest risk is the Fed not cutting in time. Yeah, that's what it is. So if the Fed does not cut in time, they're basically saying, look, we don't trust that the fiscal authorities, who would be Trump and Congress and Biden, we don't trust that they can restrain their spending and they can reignite inflation and also increase the debt. So we're going to just crush the economy, right? The Fed might be forced to crush the economy by keeping rates higher because things are already falling apart. I'm telling you right now, we're going through the business cycle. Things are already falling apart. So the Fed knows that, but the Fed's like, look, you guys need to chill out on spending, but they're not because they want your votes. Okay. And they're not going to chill out. And of course, they're going to say, hey, look, we know how to spend without causing inflation. Maybe that's the case, right? It's very unlikely, but maybe that's the case. If you can get productivity up somehow, then it'll work. But who knows? Either way, the Fed is not going to cut rates if they keep promising to spend so much. They can cut rates, but they're going to cut too late. That's my point. They're going to cut too late. All right, Veronica. So I got here late. Don't know if you've been over it. What do you expect? Initial jobless claims tomorrow. Okay, cool. We haven't gone over initial claims. My expectation is that they creep up. I don't think jobless claims are going to spike. I'm not seeing I think we're getting a very slow moderation of employment. Employment is slowing down slowly. I'm not seeing a recession. What I am saying is that the market might overcorrect at some point, maybe going into earnings, making sure, hey, look, if the Fed is not going to cut based on the employment slowing down, we're going to correct for the Fed. We're going to correct ourselves, right? The market's going to correct itself because the earnings are not going to be as great if employment is down, if manufacturing is down, if the business cycle is weak, which is earnings, then the market's going to have to correct and wait for the Fed to cut rates. A lot of sectors need rate cuts. Manufacturing is starting to recover, but it's going to need rate cuts. Construction needs rate cuts. Housing, real estate needs rate cuts, right? A lot of these, not a bunch of rate cuts, just a couple. What up, Tigger Media? Check out the market cycles for INVAX when you get a chance. INVAX. Okay, I'm not sure. What is INVAX? Let me know. Anyways, let me get to this business cycle. I know this is kind of long, but we're going to go through this. All right. So anyways, the ISM is the business cycle. Okay. When the ISM goes up, that means forward-looking earnings are going to be increasing over time. Earnings go up. Not at the same pace, but that's telling you that earnings are going up. When momentum peaks, that is peak momentum for risk assets. This is peak momentum. Now, where are we at? Well, we're not at the bottom. We're starting to lift off, but we're still below 50. So here's your 50 mark. We got above it a couple months ago. For 1 month, we came right back down. But you can see that the business cycle is reaccelerating. So I'm still optimistic about earnings being higher into the future. But in the next couple months, we don't know what's going to happen. All right. So the ISM is moving up. The positive part of the ISM, the most important business cycle metric, is new orders, right? And new orders are how many orders are picking up into the future. So new orders, as long as these are accelerating, as long as these are coming up, I think the next 12 months, next 9 months for crypto and for stocks are higher. The trend is still higher. So that doesn't look like recession, right? We're we're not contracting when it comes to new orders in the business cycle. We're not contracting. We're still coming higher, right? Employment is a little different. Employment looks a little shaky. So we have service employment and we have manufacturing employment. This is manufacturing employment. Manufacturing employment is starting to pick up. It's still below contraction, right? It's still struggling. I would just say it's kind of neutral. It's kind of stale, right? Stale growth. But if we go to services, services are really struggling. Now, a lot of people are not seeing this. Services employment is struggling. Okay, that is going to be anywhere you get a service, a haircut, get your nails done, whatever it is, anything that has a service business. If we look at the broad economy, services employment is falling. Now that doesn't mean the stock market goes down, because what's really happening is stocks are using AI, right? Companies are using artificial intelligence, which is more of a service. Therefore, employment is falling. So this might get the Fed to cut. I don't think this is recessionary. I just think it means there's going to be higher unemployment going forward, but not a spike. Okay. I don't think it hurts stocks because stocks can adjust. The market can adjust. So we have employment. Now the big win again, new orders are higher. Okay. Employment is whatever. And what is really contracting, the thing that we really got to worry about here is going to be that's not manufacturing employment. Let's go to actual employment. Okay. So this is what we're going to get on Friday. This is what we get Friday. Nobody believes these numbers, but we'll see. We'll see how it plays out on Friday. ADP payrolls, I think we got tomorrow. Unit labor costs. All right. So here's what we're looking at for Friday. All right. Unemployment is going to continue to climb. We're at 4%. There's a rule called the SARM rule. And the SARM rule says from the low, if unemployment moves up 50 basis points, this was 3.4%. So if we go to 3.9, which we're already past, okay, the 3-month moving average is what it uses though. If you go up 50 basis points in a year, within a year, then you're probably already in a recession. That's the SARM rule. Does it really apply? The yield curve doesn't even matter at this point. So I'm not sure, but I will tell you this. If we get to 4.2, a lot of sectors will be in recession. So unemployment is climbing, which means that is a contraction of employment in the US broadly. Okay. We got the SARM rule right here. Okay. We got the indicator right here. Here it is. I didn't know they had it on this website. Okay. So we're at 0.3. If it gets to 0.5, then that means we're probably in a recession. I don't really know. I mean, who knows? It's just another model there, right? All we know is employment is slowing. The question is, will the Fed cut in time? Will the Fed cut in time, or will they be too late? What are they going to do? Initial jobless claims. We just pulled this up. I'm not too concerned about these. These are not, yes, they're climbing, but they're very low versus the past, right? If you go versus the past, let's just reset this. Okay, we're not that high. I think we're about as high as we were the last summer. What is it? 2023 in the summer. We're about that high. So we might climb up. We'll see. We'll see how that plays out. Now let's go over where things are really struggling in the business cycle. Okay, so ISM is flat. It's neutral. We're kind of stale. We're stuck. The business cycle is stuck. It's trying to reaccelerate, but it needs Fed cuts. It needs Fed cuts. Now, if we go to real estate, this is where people are hurting. This is where people are actually hurting. We go to real estate and we go to new home sales. All right. There's the level of home sales, and there is this new homes? Yeah, this is inventories. Okay. This is the supply. That's not what I was looking for. New home sales right here, year over year. So we're looking at the momentum of new home sales, the momentum. That's what we want to see. So this is year over year momentum, right? The cycle of momentum, it's falling. It's below zero. So housing, new home sales are collapsing. It needs cuts, right? We need cuts because interest rates are too high to get a home. So we need cuts there. And if we jump over to where's pending home sales, those are probably low too. Existing home sales, supply of existing homes. I think supply is kind of low. Oh, supply is picking up. So that's not terrible, right? You got some supply picking up, but if the interest rates come on the table, the supply is going to pick up. That'll be good. We need more supply for sure. But I'm looking for housing starts and building permits. Housing starts. Where's the housing starts at? We'll just type it in. And housing starts is a leading indicator for, here we go. Leading business cycle indicator. Housing starts tell us, okay? Housing starts tell us, let's take this off. We don't want to see the level. We want to see the momentum. Okay. So housing starts pretty much tell us, are home builders even building? And they're really not. That's in red. So less contracts are being made, right? Contract activity is rolling over. The Fed knows this, but I think that they're in a bind, right? Are they going to allow this to roll over and real estate prices to come down to some degree? A lot of people want that, other people don't. And then building permits, there's less permits being bought, so are being acquired. So if there's less permits, the market is saying, look, we need cuts or else we're not going to build. And that's not going to be good. So we might be looking for a crack in real estate. That's another one. Jobs are so hard to get right now. It really depends where you're at, right? If you are a high skilled worker, don't get offended. If you're a high skill engineer, there's a job, because what's really in need is higher skilled work. Can't hear you, bro. Oh, you can't hear? What? Okay. Well, that's weird. What else we got here? New home sales down. Okay, so what is up is non-farm retail sales are flat too. So US retail sales, This is what I mean by growth is still, still kind of flat. We're still waiting for this to pick up. Retail sales are basically the consumer, right? Consumer is 70% of the economy, still pretty flat. We're going nowhere. We're at the same point we were in 2023. So growth is just sitting, like it's neutral, right? Consumer growth is pretty neutral, and that's why we're at a spot where the Fed is going to need to create one rate cut. If not, bonds can come down. I'm sorry, bond yields can come down, but they're not, because they're expecting more stimulus into the future, right? They're expecting more stimulus into the future, and we'll see how that plays out. I think it's a stock picker's market. Industrial production is still stuck. What else we got here? ISM services. Oh, we get the service report tomorrow also. ISM services tomorrow. We'll see if the service economy is still expanding. Business activity is strong. So even though it looks kind of recessionary, the ISM services, so this is like a forward-looking growth for the service economy, still hanging in there, still expanding, still in expansion territory. 50 is down here. This is 50. So the service economy is still expanding, but there's no momentum. It's not like gaining momentum. It's just remaining above growth, right? So I still think forward-looking growth looks good. It's just over the next couple months, you might have some liquidity concerns, right? Housing needs rate cuts, and disinflation should help, but we just don't know. Business activity is up also, right? Business activity for services is picking up, so that's good. We have a lot of constructive things. The real question is the Fed going to cut too late, right? So we're all data dependent here. All right, let's go to some of these comments here. It's a stock you're not doing those today, so whenever you get a chance. Okay. All right, we'll go to some stocks. See, what are we missing? I think we got pretty much everything. Let's go back to the charts. Oh, you know what? There is one thing. Check this out. I think this is it. It's no, okay, sector. No, that's new. They have a lot of new stuff on here. I think it's earnings growth. Yeah, I can't find it. Anyways, earnings growth is picking up. So earning expectations and earnings growth is also higher. And it's mostly because of productivity, right? More productivity is going to bring in more earnings for the consumer. Now, for the actual names I'm looking at, I like Caterpillar. They're in China. China's starting to recover. Okay. And Caterpillar is forming a bull flag. Now, this can continue to fall, but we're getting close to an oversold condition. And the US infrastructure bill is still printing money, meaning Joe Biden, even though he might be a little slow, his administration is still releasing more stimulus for infrastructure growth. Why? Because they do not want unemployment to rise. They're going to do everything they can to make sure there's enough growth in the economy, which means they're going to create more jobs as they've been. And I know people don't believe, oh, that's not happening. Look, I'm in Phoenix, Arizona, and there's so many jobs over here. There's jobs everywhere. It depends what region you're in, but it just so happens they're building chip manufacturing plants here. So the jobs are here, right? Construction, the population is booming. So it depends where you're at. Either way, Caterpillar is an infrastructure play, right? They have all the machinery to build and they have a lot of contracts. So I think Caterpillar has a nice secular trend here. I like Caterpillar. As a trade, you can see that it's been in this pretty strong uptrend for a while. And it's pulled back. That if you use a Fibonacci, it pulled back right where it should be. Maybe we got a little more downside, obviously. Oops, that was the wrong button. We do have a little more downside, but I'm gonna keep my eye on Caterpillar. I'm also liking, okay, CEG. We already talked about CEG, right? Constellation Brands, utility play on data center electricity growth. That's what this is for AI. That is going nowhere anytime soon. Data center electricity growth, as long as it can hold what is this, about 200? You want to see it hold 200, and then we'll probably get a breakout. We'll probably get a breakout at some point. RSI, I want to see the RSI come down so it's oversold before I even try to trade it. Okay. Copper, Southern Copper Corporation. It has a nice pullback. Copper might make another run when growth picks up. I don't think we're going to see this pick up anytime soon. But if we do get rate cuts, this is going much higher because now loans and business growth is going to pick up and we're headed towards another expansion. Robinhood, I like Robinhood. I want to see it come down a little further, but Amazon Amazon just broke out. We talked about this maybe like a week ago. Amazon pressing all-time highs. Okay, broke out of all-time highs. I was hoping it would come down a little further, but now it's taking off. This is a huge AI play. You can see they're getting rid of workers. Amazon is using robots, so their productivity growth will be much higher. They can produce more for less. They can produce pillar. What's pillar? They can produce more for less. So Amazon going higher. Palantir, another big AI play. I think it's up a little much at this point, but it looks good. AMD, still waiting for AMD. Still waiting for AMD, right? AMD's in a huge secular trend. Okay, it's still holding the anchored VWAP. I should be pulling this anchored VWAP from here. Let's do this. Let's do our anchored VWAP here, see where we're at. Okay, so it's been struggling at the anchored VWAP from that gigantic low in October. But it looks like today was one of the biggest days. Yeah, I like AMD. I like AMD for sure. Tesla obviously ripped. You missed it already. I mean, you missed in the short term, but in the long term, once Tesla gets above this level, it's starting to test this trend. It's lights out because it's the most shorted stock in the market. Once it gets up, it's gone. Viewers to share. Okay, cool. So that's what we're looking at for Tesla. And then obviously Bitcoin. Look, this is going to be a gigantic breakout. It's coming. It is coming. The crypto breakout is coming. Demand is picking up. There's a lot of deregulation that is going to be priced in. A lot of deregulation, as in, hey, we want crypto in America. We want to be pro crypto. That's what's happening. Trump is supporting crypto now. This is the big narrative. He wants to produce all the Bitcoins in the world. He wants, if he gets elected, who knows? Joe Biden might flip also and say, hey, look, we're going to be pro crypto because you have 50 million crypto holders in the US. So they have to what? They have to pander for your votes. We talked about this all year. They're going to keep pandering to the votes. So the real issue with Bitcoin consolidating and not breaking out is, well, it takes a couple months after the halvening, right? Now it's already been a couple months and you just never know when it breaks out. But I think in the past it was like October. I think it was October last time where it really broke out. I thought it would be a little stronger, but we did have the Mount Gox release where, there's probably a lot of people from what is this, 2011, who finally got their Bitcoins. Maybe they're selling. Back then Bitcoin was like $1, $10, $100, who knows, $100, $50. Now they're selling it at 70,000. So you're getting a little bit of selling pressure, but eventually what happens is the Bitcoin miners capitulate. They capitulate and they stop selling Bitcoins because they are no longer profitable. Their electricity cost exceed, or actually they don't get rewarded for mining Bitcoins. They're wasting their money. So they fall off the network. Therefore, they hodl their Bitcoins. They hodl their crypto. They go get another job because they no longer can mine crypto. And the selling pressure stops. And that's when we start going vertical. Who knows when that'll be, but it's coming. Inverse head and shoulders. Oh, you're talking about I'm not sure. Tesla. I think he was talking about Tesla. Ethereum consolidation. We're all in consolidation mode, right? Chainlink, this is my favorite. Chainlink has a lot of good stuff up the pipeline, but we're just gonna have to be patient the way it was for Tesla. Everybody wrote Tesla off. Now it's exploding. You got the inverse head and shoulders, like somebody said, broke out of that shoulder. Look for a pullback. I think Tesla could come back to 210 and fill the gap and then move higher. Or it could just keep going. Who knows? But we do have August 8th. August 8th is the release. And my expectation is that it tries to move higher into August 8th and then it sells off. Because that's typically what happens with Tesla. It sells off into August 8th. Let's see. Amazon. Yeah, I think that's all I have. That's all I have there. Any other questions? Let's see. Where did the S&P end up? 548. Man, it is strong today. Almost no volume. Actually, we did get volume pickup at the end of the day and market participation. Okay. Wow, what a move. What a move. Okay. Let's do some like intraday price action here. I don't even know who watches the S&P, but this is how I watch it, okay? We've seen a lot of, there we go. We have a lot of levels here, right? We had a couple levels here. This level was put in during the manufacturing day. We gapped up, and this was the ISM being positive, but it wasn't, I'm sorry, not ISM. It was global. It was a global PMI. So it was a global manufacturing, and we sold off on that. We retested it for PCE and got crushed. So I don't know if we get ahead of that. What is the catalyst? Employment? We're not there yet. We still have Friday. Oh, PayPal? Okay. I don't know what pillar is, but yeah, we can do PayPal. We can take a look at PayPal. PYPL. Let's see what PayPal we got. PayPal. All right. PayPal looks like trash. I'm sorry to say it. Yeah, it's dropping anchor VWAP. It couldn't get above the level. Is it oversold? Maybe. The fact that it's in such a downtrend. And the thing is, PayPal needs rate cuts. PayPal is an interest rate sensitive business model that needs rate cuts, in my view. And see, it got below the anchored VWAP from the low. This is from the previous low, or the lowest low. Actually, let's go a little lower. I think we're on the 30-minute chart. No, we're on the daily. All right, let's take this to the lowest low. See where we're at. Volume weighted average. Yeah, we got below that, retested, went lower. I think there's better investments in PayPal as a trade. I'd be more interested in trading PayPal, but I don't want to see it get above 68 first, even fill this gap at 72. I don't see PayPal going anywhere. This thing got so hot on the internet. Everybody was like, oh, PayPal, the options premium looks good. But the market sees that and prices it in really quickly. And I think there's just too many eyes on PayPal, and it needs a really good earnings report. It needs rate cuts, in my view. I think it needs rate cuts. Same thing with Square, right? Kind of the same business model. They've gone nowhere. They're just consolidating. They need rate cuts. Versus you look at a company like JP Morgan, who has these same services, all-time highs. They don't need rate cuts. Although I would never buy JP Morgan. I would never buy it. But, financial services, if that's what you're looking for, You have Robinhood doing a lot of things. I think Robinhood's a better bet for financial services. They're getting into a lot of things. They're doing credit cards. They're probably going to be in the payments. I mean, they're doing a lot of stuff. So I think Robinhood's a better bet. As a business model, technically, it's also trending higher. Technically, or fundamentally, it also has the crypto cycle behind it, right? It also has a crypto cycle behind it. And I think they're growing faster than Coinbase, from what I've heard last. You see, Coinbase looks a little wonky. Not a big Coinbase fan. Mara, Mara. I'm never a fan of these little miners. I'm not a big fan of the miners. Wow, what a double top. Got crushed. I don't really like the price action of the miners, but it looks good. It's on trend. I mean, it's still on trend. Let's see what that see what the anchored VWAP looks like. Yeah, this looks good. I mean, Mara looks good. Mara does look good. Mara looks good. If it can clear, now there is a resistance up here, obviously, but if it can, I mean, you're just watching Bitcoin. You're really just buying Bitcoin. And if this is a derivative of Bitcoin, if Mara is just another derivative of Bitcoin, then Bitcoin is primed to rip higher, and maybe it makes a new low. Who knows? But I think this is a good spot in the cycle to get long, right? A little reverse head and shoulders here, a little bit, right? I think this is a good spot in the cycle to get long because Bitcoin is still in the banana zone. It's in that zone of accumulation where that's pretty much it. The accumulation, phase is over, and it's a matter of minor capitulation. Once they capitulate, the selling pressure for Bitcoin falls, and all those coins that are still being accumulated are going to drive the price up. CLSK, not sure what that is. Clean Spark. Is this an EV play? Clean Spark. I'm not familiar. Technically, looks like it is holding. Let's see what the RSI looks like. I don't know how clean this is, but I mean, there's definitely support down here. There's definitely support. You could say this is a wedge. I don't know what they do exactly. Sounds like some type of renewable energy play, but I'd be careful of those right now. They need rate cuts. A lot of these companies like ENPH, they all need a rate cut. Oh, it's getting killed. Enphase is getting crushed again. Wow. Yeah, a lot of these need rate cuts. Who doesn't need rate cuts? Let's see. Google doesn't need rate cuts because interest rates are actually pumping their business higher. So Google doesn't need rate cuts. Who else doesn't need rate cuts? Meta does not need rate cuts. Okay, Meta doesn't need rate cuts. Amazon doesn't. Apple doesn't need rate cuts. Breaking out again. And then the consumer weakening might be an issue. So consumer spending. Here we go. How about Elf Beauty? Consumer slowing. Chipotle might be a good play going forward. Chipotle is finally starting to sell off a little bit. I don't think Chipotle is gonna, drop their business revenue. I don't think the revenue is gonna drop. So Chipotle might be good to buy in a pullback, maybe down to this level, especially with that oversold RSI. If it gets down there, yeah, I think it was overbought like crazy. Okay, I think we pretty much went over. Oh, Dutch Bros. I think that one was on fire. Yeah, Dutch Bros looks good. Now I'm not gonna own this stuff, but I remember seeing Dutch Bros breaking out of this zone that had been in for a while. Yep, I would want to see the retest, pull back and retest of. See, you could say 35, 39. Yeah, you want to see a retest there. Clean Spark is the best BTC miner. Oh, that's what it is. It's a miner. I did not know that. Okay. Invax. Invax, Novax. What is Novax? What is Novax? So Veronica said, check out the market cycles for Invax when you get a chance. Market cycles. I mean, this thing, this is like a little penny stock, huh? I just don't know what is the narrative? Is this biotech? Invax? Novax? Biotech? I cannot, listen, I have no edge in biotechs. Vaccines. Okay. I have no edge here. So I'd only be able to look at it technically. I don't really know, right? The cycles for vaccines, regulatory process. I don't know any of that. So I don't really have an edge for you, Veronica. I don't know anything about it. Micron's in a strong, I think Micron and AMD, maybe Taiwan Semiconductor look pretty good. The only thing is, I heard that the chip cycle is kind of weak at this point in the cycle. And I'm telling you, I would wait for NVIDIA. Because if NVIDIA overproduces chips at this point, this is my expectation. NVIDIA is going to overproduce chips. They're going to produce a little more chips than are needed, and they're going to have to drop the prices. And that's going to drop revenues, future profits, stock declines, and I think the whole SMH chips sector declines. Now, Micron looks good. It just depends what your time frame is, right? Let me see. It looks good. It just depends on your time frame. I'd wait till it gets oversold again, sort of how it did back here. It didn't get I mean, it didn't really get oversold, but I would wait a little longer. 5 to 10 year cycles. Okay. Well, maybe that's the bottom then. I don't know. I really wouldn't know. Big sell off there. Is it trying to rebound? Yeah, I don't know about Micron. It's just up a lot. I kind of like I think that's a clean pullback. It's a pretty clean pullback. Let's do anchored VWAP, see what it looks like. Still holding that anchored VWAP. We can do the Fibonacci and look at the reverse. Let's look at the reverse and see where it should pull back. There you go. So if you do the Fibonacci retracement, it looks like a good spot would be 125 from that previous swing high. 125. So yeah, I don't think you can go too wrong with Micron at 125. Oops. Okay. INTC. Let's do INTC. Yeah, I don't know. There's an unlimited buyer down here. This thing just doesn't drop. This looks like the government is buying it because they kind of know they have to compete, right? This is like one of the only special chips manufacturers that is not international. This is a US based chip manufacturer. They compete with TSM and I don't know who else they compete with. I'm not a master on semiconductor chips, but I know they all produce different types of chips. So I don't know. I mean, it looks like they're not going to let this drop. So it could be a nice swing trade. I wouldn't do no momentum on this. I would probably sell puts. You could sell puts and, buy a call below that, a credit spread, and sell calls on it or just own the stock here. But I wouldn't look for a breakout because this isn't known for, very big breakouts. And I would also learn what drove the stock lower in the first place. What drove it lower in the first place? I don't know. I like to have more than just technicals personally, but technically, I mean, it's going nowhere. So you could sell options on it. Mm, is it Starbucks that's getting crushed? I mean, you could sell calls on this. Yeah, Starbucks getting crushed. Big reverse head and shoulders. I mean, maybe it's had enough downside. Let's see. Nah, I think it goes lower. Dutch Bros eating up their competition. Um, is there anything else interesting? I bet insurance has slowed down a bit ever since the inflation slowed down. Yeah, Progressive. Because inflation was, I mean, not inflation, insurance prices were up like 20% a year. Now that they've slowed, well, look at insurance kind of slowing down. That's a good sign for the economy, though. Insurance is coming down. Good sign. Tired of those crazy premiums. INTC, we just looked at INTC. This guy must have just joined. Yeah, it's going nowhere. I mean, I wouldn't buy options on it unless you're going to sell calls or sell puts. I mean, you could sell calls and puts, do an iron condor. You can slap on an iron condor. It's going nowhere. And I bet it doesn't go anywhere till earnings. So make sure you close out your iron condor before earnings. I wouldn't trade it. If you want to own it, I mean, yeah, it's as for ownership, the only thing is Intel doesn't have a great track record for really making big gains. That's the only issue with Intel. Like, what are they going to do? Why do they have such a crappy track record? Even if it goes up, you got what? You might double. You might double. I mean, I don't know. To be honest with you, I'm not going to say. I'm comparing it to crypto. That's why. So I'm like, comparing it to the crypto cycle. It's a stable company though, for sure. If you want to own it. Let's go to tech really quick. I want to take a look at kind of what we're seeing here before we close out. So look, small caps, they probably have a lot of potential, but they just need rate cuts. They need at least one rate cuts or bond yields to come lower, and we're not seeing that. S&P, dang, that thing is it still going up? Sheesh. Off of low volume. Just be careful here. Lowest volume of the year, I believe. Yep. The lowest. Yep. So today is a pretty big candle, but it is the lowest volume of the year. So there's not a whole lot of sellers. What are they waiting for? Maybe they're waiting to sell again up here, right? Somewhere around 550. We are in a breakout pattern, but the next major news is going to be employment. And the question is, I don't even think we know anymore. Does the market want to see weaker employment or stable employment? And I think we're starting to transition here. I think we're going to transition to, let's see, I think the market wants to transition to, hey, we don't really want to see too weak of employment. We want to see it kind of in the middle. If it's too weak, growth scare. If it's too strong, the Fed doesn't cut. So you're kind of caught in the middle. Trying to see what we have tomorrow. What do we got tomorrow? Tomorrow we got, oh, you know what? Tomorrow is services. ISM services. Last time we had ISM services, we had new orders pick up. So we had demand pick up and we had prices down and the market exploded. I remember that day because I got burned. Yep. July 3rd. June 3rd. That was early July, early June. Yeah, Intel will probably fire. So, somebody's buying Intel. Somebody's not letting it drop for sure. Someone's not letting it drop. Nvidia, Netflix. Oh yeah, Nvidia and Nvidia looks like it's gonna roll over pretty steeply. This might be good for earnings though. If it rolls over pre-earnings, it sets up a good earnings. It sets up a good earnings bounce, right? And Nvidia reports kind of late in the cycle. I think the banks start next week, and Nvidia is like one of the latest stocks to report. So if this continues to fall, then the bounce of Nvidia is going to be the market. I can see it aligning with the market rebounding. Netflix trying to break out of all-time highs. This might be something to look at. They got a lot of new partnerships. Take that off. Netflix, Nvidia. I mean, Tesla. Where we at? 230 already? Sheesh. Those are all the good ones. You also have biotech. I don't know if anybody looks at this. I'm just going to take a peek really quick. Oh, that's gig. Let's see. Spotify. Man, Spotify just climbs higher slowly. Snapchat, Airbnb, Twitter. Roblox got smashed. Zoom. Man, Zoom looks like trash. I don't know what's up with it. Shopify trying to move up. Instacart, DoorDash. Dang, yeah, they all look like trash. But no, biotech. When you go to if you look at biotech, what is this? Novo. I mean, that thing's been straight up. Again, I have no edge, so I don't really pay attention. Eli Lilly, same thing, had a nice drop this morning, came right back up. These ones do not fall out very strongly. Okay. Teladoc looks like they came out with some AI, bounced, and then went lower. Yeah, a lot of these stocks need rate cuts. That's all I got to say. Okay, let's get back to. I would just keep my eye on here. I think the next big move is in crypto. I say that every time I come on here, but I think Nvidia took a lot of the cheese, and now it's going to rotate into crypto. Crypto is building momentum. It is building momentum. It always takes longer than you think, and then it moves more than you think. Tom Lee said that typically the biggest, if you take out the 10 days from crypto, 10 of its biggest days, it's flat. Therefore, it only takes 10 trading days to get the full cycle in. 10 trading days. You don't want to miss the 10 trading days. That's why it takes so long, because it doesn't make small moves. It makes big moves when it does move. So recap, the Fed is showing a very hawkish stance against the Joe Biden and Trump spending. The Fed is saying, look, we do not like the deficit spending. It's out of control. There's too much debt. Therefore, that is going to push the Fed to stay a little more hawkish, maybe hold rates longer, and maybe until something actually breaks. Not good, right? So if Trump said, "Hey, you know what? If he says anything that is less pro-growth, then the market might like it." And I'm talking about the bond market. The bond market is the thing that we want to see to ease conditions. We want to see TLT go back up, right? TLT go back up, and it really should, because this is, TLT is an asset, or bonds are an asset that protect you against falling growth. So if we are headed for recession, this would be a good buy. If you think we're headed for recession, this would be a good buy. If you think inflation is done, this will be a good buy. But, the sell off is like, hey, we're anticipating more liquidity from Trump, and we need to, price that in, right? And that's all yields and tax cuts, 10-year yields. We don't have them up there. US 10-year. Go to US 10-year real quick, macro. No, I just want to go to. Oh, is this what somebody was looking at? SunPower? I know somebody mentioned that. This thing got destroyed. 240, not destroyed, but it's definitely not picking up. Those memes are not working. You're better off on a crypto meme. All right, here we go. No, that's not it. chips profits moving into Tesla. Shoot, it looks like it. Possibly moving into electric vehicles again. The narrative is starting to switch. I think it does go into EVs, and because look, just think about it this way: not just EVs, but energy storage is going to be should be the big thing, right? Because of all the AI infrastructure build. Well, you're gonna need cheaper energy. So I think a move into battery technology would be a good one, which is why I'm not so long, but I'm still long cooler technology. Your big risk here is oil breaks out, right? That means interest rates go higher, dollar goes higher, tightens the cycle, and it holds things back a little bit. It's going to stall the reacceleration. So I like cooler because it's such a small cap. They work with NASA. Um, when it does move, if it does move again, it has a big move. The last time I think it bottomed at like 9 cents, 10 cents, and it moved up 750% from the low. So if we do a little bit of we do a little bit of technicals here. Actually, let's do this. Has it bottomed yet? Has cooler bottomed? Well, I have a couple thoughts on this. What up, Dimaj? I know you're holding cooler too. It got below the retracement level and it's showing a head and shoulders. So this is a good pattern, right? Good pattern. You got the reverse head and shoulders. So the pattern's good. Does it have the juice to get above? I don't know. It's still below anchored VWAP from the lowest of the lows. It's still below that. So I think it's going to be clear when it gets above 45 cents. You get above 45 cents, you're in the clear. You get above 46 cents, 48 cents and hold definitely above 50 cents, you're gone. It's gone over 50 cents, right? Very risky company, but I still think it's early. It's very small, very, very small, and it can move. This thing can move. It's part of battery technology. And I think that's the next theme, right? Artificial intelligence needs cheaper energy, lower costs to actually amplify. It needs infrastructure. It needs copper. It needs chips. It needs all these things. And then you have blockchain. That's the other narrative. You also have blockchain. Anyway, so Fed, anyways, yields can go higher because of, just pay attention to the political talk. Oil shock, beware that participation sucks in the market. Actually, with this big move in the S&P, I want to see if internals actually changed. No, they're crappy. So the S&P participation is actually declining while the S&P is making a new high. Just keep this in mind for technical reference. Maybe I look stupid and nothing happens, but the amount of stocks that are actually strengthening is falling, right? Or they're weakening. And then you have the S&P making a big move. What are we at? 548.30. This thing is making a big move off of very low volume. So that's also happening. So I don't think this is the breakout. I think it's a trap in the short term. And I don't really hope it's a trap, but it looks like a trap. That's all I'm saying. It just looks like a trap. I want the market to go higher, right? I want stocks to go higher. It just looks like a trap in the short term. Where's our put to call ratio? Where are we at? Oh, and we're very low. Put to call is very low. So there's a lot of room for puts to come in at that level. A lot of room to come in. And then also we have housing needs cuts, disinflation helps. The big positive here is that inflation is falling. Oh, liquidity. That's what we need to get at. Okay, liquidity. So this is not good. Too many things up here. Let's get rid of some of these. Just gonna widen this. Okay, so this is the S&P with liquidity. When liquidity finally bottomed, as in Fed support, right? The Federal Reserve is in red. That's their money printing, if you want to call it. That's where they increase liquidity reserves into the banking sector. They don't do it into the economy. They buy more debt, or they just, print money and give it to the banks. Well, that's been coming down lately. Liquidity kind of sucks. This is Fed net liquidity. That kind of sucks. I still believe it picks up later, but it does suck at the moment. So that's a net negative for the market for a short-term correction. You can see the last correction we had, liquidity really came down a lot, right? It came down a lot, tried to make a new move, and then it bottomed here. So liquidity is kind of trash, which I think all these things are aligning for a quick little, maybe a quick little, correction. I don't know if it's going to be that big, but if we do look at the Fed balance sheet, it's still coming down, right? Even though they're doing less of it. Now, global money supply on a year-over-year basis, I mean, it's should be picking up now that the ECB is cutting rates because they're going to create more collateral in the system, but that looks kind of stale. Everything is frozen. What I say is the business cycle is stale. It's stuck. It's a little stuck, and it probably needs a rate cut to reaccelerate. If not, then it's going to need better earnings to accelerate, right? Liquidity, on the other hand, needs a recession. If we get slower growth, liquidity will pick up, right? Global net liquidity is even lower. So that's not supportive of crypto, right? Once this picks up, crypto goes higher. September, October, November, we had liquidity pick up globally. I don't understand this. I just don't understand why liquidity continues to tank when, a lot of these countries are cutting rates. But I still expect liquidity to be higher into the future. And then the reverse repo facility had a bump higher. I talked about this on Twitter. This is a lot of money went into the Fed facility out of bonds. I think that's kind of the switch that was made. They left the bond market and went into the RRP, the reverse repo. So that's not really good for the market. That means liquidity is leaving the banking sector. So I think we have a lackluster liquidity in the market, and I don't know what is going to kick things off again. Probably another good inflation report. That's my guess. So I think the Fed, is saying, hey, we need more progress on inflation, and the stock market needs better earnings. But are we going to have better earnings? Man, what a move in one day, though, huh? What a move in one day with no volume. I mean, that's kind of sus to me because this, I mean, it just looks like they're setting up to sell. Are we gonna break out tomorrow? Are we really gonna break out tomorrow? I doubt it. Where do you see the balance sheet chart? Oh, balance sheet chart is I'm on TradingView. So on TradingView, you can type in WALCL. It's called WAL. WALCL. Here, I'll just put it up here. Right here, WAL CL. That's the Federal Reserve's balance sheet. But the thing is that they're not doing QE on the balance sheet anymore. Right? They're doing QE through these other backdoor facilities. So they're not going to show us exactly what they're doing. Every time people figure it out, they're going to switch it up. But we can still use the balance sheet to, it's going to turn eventually. It's going to turn around eventually. Or maybe it doesn't. And it continues to sell off. But then we got to look where's liquidity coming from. Let's see. Fed net liquidity. I would definitely look at this though. Fed net liquidity. That's an indicator on TradingView. Fed net liquidity. The market needs liquidity to break out, right? It's either going to be better earnings, better guidance, or more liquidity, and or bond yields rip lower, but right now they're not because oil's up. So I'm just kind of worried. What is the ticker for liquidity? It's not a ticker. This one you just go to indicators and you type in Fed. You just type in Fed net liquidity. Fed net liquidity. Yeah, that's how you find that one. So definitely we're at the lowest, we're at very low liquidity. Maybe we bounce here. Last time we were this low was October 2023. That was before the Santa Claus rally, right? So maybe we'll get a end of the summer rally, right? Into the end of July. That's what I'm hoping for. But, you can see obviously the the divergence, liquidity is diverging from the market. The market's just going up off of Amazon, Microsoft, Google, which is fine. I don't think it's a big deal, but there's always a set off once they take profits, right? They might be, once they take profits, there's not really anything else to go into at the moment. You got Tesla running up, you got individual stocks. So we'll see how this plays out. I'd be a lot more constructive if we were coming lower at the moment, but we're coming down. We're going up on low volume, right? AMD is starting to move. Yeah, AMD is finally starting to move. Big move today. Okay, nice. 164. Shook a lot of people out there. Okay. All right. Well, I think that's all. That's all for today. Thanks for joining. And we'll do another update when the time comes. For now, just so you guys know, subscribe to the newsletter. Link in the description if you want to check it out. Yes, I'm still strong on Chainlink, 100% strong on Chainlink. But right now, crypto, I'm just trying to stay patient. There's a lot more activity in the stock market that we can talk about. They kind of have the same issues, but of course, I'm very bullish on Chainlink. I just think crypto is a different type of market. And right now, we're in the banana zone. We're in the boring phase, right? We're in the boring phase. Although projects get passed, you still need deregulation. You still need more liquidity. So at the end of the day, once liquidity picks up, crypto is going to rip. But liquidity's been very low, very stunted. Not much liquidity coming in. And rates just dropped and they went right back up. And the dollar's still elevated, right? So you need dollar down, rates down a little bit, and you need liquidity to pick up. And it might just take a collapse in housing or commercial real estate, another break of the banks. It might take unemployment to get to 4.2%, or it might just take PCE to drop to like 2.4. Who knows? Inflation to break down. Might take a while, but I'm still strong there. What is liquidity? Liquidity is a lot of things, but in general, liquidity is the credit that is created into the system, right? So, for instance, when you try to get a credit card, they're going to give you a certain amount of credit. Well, if they give you, $2,000 in credit, that's how much liquidity they're giving you. That's how much credit they're giving you. If they give you 4,000, they're giving you a little more liquidity. Well, the central bank does the same thing for the banking system. It gives them credit. It buys up their treasuries. I don't want to get too technical, but it basically purchases debt from the banks and gives them cash, gives them liquidity. With that extra liquidity, they can lend out, they can do more lending, or they just invest, or they do some investment. They either lend or they invest. They lend or they invest. So more liquidity means asset prices go higher, period. Quick, go for it. Snipe all of them coin. Not sure what that guy's talking about. Can you explain the repo the easy way in inverse repo, please? Oh, okay, cool. Yeah, we could do that. All right. So reverse repo. Let's see. All right. So he wants me to explain the reverse repo. There's a real good correlation between the reverse repo and the stock market. So what I'm going to do is flip the reverse repo. It's easier to do it this way. Okay. You see how they correlate, right? You see how the reverse repo was going down. In reality, it's going up, just so you know. Okay. But I'm going to show you a correlation. So think of it this way. Let me put the stock market down. Back in the day when inflation started ripping higher and there was nowhere to put cash, it didn't want to go into bonds, it went into the reverse repo. The reverse repo is a facility. This is a facility that the Federal Reserve will pay cash. So if cash comes in here, it's going to get paid an interest rate, an earned income based on the Fed funds rate. So cash came into the reverse repo and it started getting paid until this point here. This is December 2022, where the bull market started for the stock market. So again, the peak of the reverse repo was the pretty much the bottom of the stock market because all that cash started to come back into the capital markets, right? It doesn't go into the economy, but it comes back into the capital markets. It's stuck at the reverse repo, which is just this offshore banking account. It's not really an offshore banking account, but you could say it's an offshore. It doesn't go into the economy. It doesn't go into the financial institutions. But as soon as the reverse repo starts to drain and come back into markets, that is the sign. And this was also around inflation, peak inflation. This is also the sign that, and this was $2.5 trillion, right? So $2.5 trillion left of the reverse repo and started to come back into the financial system, which goes into commercial banks, goes into brokerages, goes into a lot of anything that's a financial institution. Therefore, they had liquidity to invest. And what they really did is they were buying government bonds. They were buying up a bunch of short-term government bonds because those government bonds paid 5.5% every 3 months. Instead of waiting a year, the reverse repo, you got to wait a year. For the government bonds are paying that at 3 months. So Janet Yellen, I know I'm getting complicated here. Janet Yellen and the US Treasury basically targeted the 3-month Treasury bills. They're called bills. I just call them bonds, whatever. Targeted those, meaning they created more bills to get this money out of here and to go into to basically fund the government. So this money's been funding the government spending, right? So once it goes into the government and they get the money, what do? They turn around, CHIPS Act, Infrastructure Act, they're spending money into the economy. So the market's like, all right, we got liquidity, let's go higher. The reverse repo facility is a facility that pays interest on cash. That means it's sucking cash out of the system if it goes up. And when it comes down, it's pouring cash back into the system. So it's almost done. It's almost at zero. Once it goes to zero, no more cash in the system, right? No more cash from the reverse repo. So that's when the Fed is probably going to start QE. They're going to start purchasing bonds because the reverse repo can no longer buy bonds from the government, and they need to monetize government spending. So this is all about financing. The central bank, at the end of the day, they finance the government spending. That's what they do. They finance government spending. And when they finance it, they create more money, more liquidity, and they basically take the debt off the market, and they basically retire the debt, which is why the system, you're going to see asset prices go higher forever. Okay, debt is irrelevant. What's relevant is the interest payments on the debt, and technology and productivity and all that stuff. So, yeah, anyways, hopefully that's it. I know that was a long explanation. So, yeah, I'm done here. I got to get to my cold plunge. Got to go do a cold plunge. Thanks for joining, and we'll see what happens at the end of the week. We'll see how employment goes. All right, you guys stay blessed. Lift, learn something new. Almost done with the course. That's what I was going to say. I'm still building the course up. Stay patient. Okay, stay patient. Taking my time on it. Especially if you want to learn monetary policy, how it influences markets, the different macro seasons, right? Growth, inflation, disinflation. You guys hear all these terms, stagflation, growth. Well, guess what? All those terms all mean something for the macro conditions, and different assets perform differently under those macro conditions. And your job as a trader or investor is to know what condition you're in at the moment and to take advantage of that condition. So that's kind of what the macro course is about, starting from beginner all the way through expert. And the business cycle, also reading the changes in liquidity and reading the changes in the economic cycle. All right, I'm done. Catch you guys later. Thank you. See you next time.